Hey, welcome back to the channel if you're new here. This is the place where we cut through the noise and talk about real opportunities that most financial content creators are too focused on blue chips to cover. Today's video is one I've been putting together for a while, and I think it's going to genuinely change the way you look at a section of the market you've probably been ignoring. We're talking about 6 stocks, all trading under $5, that are quietly building momentum right now. Grab a pen, stay until the end, and let's get into it. Most people will never build real wealth in the stock market because they're always chasing the same overcrowded, overpriced names that financial media keeps pushing on repeat. The opportunity nobody talks about, the one that has quietly minted fortunes for patient, research-driven investors, lives in the sub-$5 range of the market. These are stocks that institutions haven't fully loaded up on yet. Analysts haven't upgraded yet, and the mainstream crowd hasn't discovered yet. Today, we're pulling back the curtain on 6 under-the-radar stocks under $5 that are showing real momentum and the fundamentals to back it up. Before we get into the names, let me be clear about what makes a stock a genuine hidden gem versus a value trap. We're not talking about meme stocks, pump-and-dump setups, or companies drowning in debt with zero revenue. We're looking for businesses with improving financials, growing sectors, and price action that suggests smart money is already moving in. These are the setups where retail investors, if they do their homework, can get in before the institutional wave hits. Keep watching, because by the end of this video, you'll have a watch list that most people won't discover for another 6 to 12 months. The first stock on our list is Genie Energy, ticker GNE, which has been quietly positioning itself in the retail energy and solar space. Trading under $5, this company has a surprisingly clean balance sheet, low debt, and has even paid out dividends, which is almost unheard of at this price range. The energy transition megatrend is still in full swing, and smaller agile players like Genie are capturing customers that the big utilities are too slow to serve. Watch for volume spikes on this one, because when energy sector rotation happens, low-float names like this can move fast and dramatically. The second name deserves serious attention, Ideanomics, ticker IDEA, which operates at the crossroads of electric vehicle infrastructure and financial services for fleet operators. The company has been restructuring, cutting overhead and narrowing its focus, which is exactly the kind of internal catalyst that precedes a re-rating in a stock's valuation. EV fleet adoption is accelerating globally, especially in commercial logistics, and Ideanomics is building the financing and charging ecosystem that makes it possible. If even one major fleet partnership gets announced, this stock has the kind of leverage from its low base price that could multiply quickly. Now let's talk about Verb Technology, ticker Verb, a software company that most people completely overlook because it doesn't fit neatly into any one hot category. Verb builds interactive video commerce tools, think shoppable video, live selling and CRM integrations that help businesses convert viewers into buyers in real time. The live commerce market globally is projected to hit hundreds of billions of dollars. And Verb already has enterprise clients and a working product in a space that giants like Amazon and TikTok are also racing into. When a small cap has a functioning product in a proven growth market and trades under $1, the asymmetry of the trade becomes genuinely interesting. The fourth pick is Greenland Acquisition Corporation, or a comparable SPA Sorogen Biotech in the sub-$5 range. And here's why the biotech space keeps appearing on hidden gem lists. The binary nature of catalysts, a single positive trial readout, FDA approval, or licensing deal, can send a $5 biotech to $15 or $20 almost overnight. The key is finding ones with upcoming catalysts within the next 2 quarters, its manageable cash burn, and a lead candidate addressing a large patient population. Do your own research here, but the pattern is consistent. Biotech under $5 with near-term data readouts is one of the most asymmetric bets a retail investor can legally and freely make. Stock number 5 is Sievert Laryngoscope, or a similarly positioned medical device. Microcap, the broader category here, is small-cap medtech companies with cleared products and expanding distribution. Unlike biotech, medical device companies with FDA clearance already in hand carry far less binary risk, and yet the market often prices them as if they're still in clinical trials. These companies grow by signing distribution agreements, entering new hospital systems, or expanding internationally, all of which can happen quietly and then get announced all at once. The momentum pattern you want to see is a slow grind upward on rising volume, which tells you that institutional accounts are accumulating before putting out any public commentary. The sixth and final pick brings us to the fintech and digital banking space, specifically niche players building embedded finance infrastructure for underserved markets. Companies in this lane are often misunderstood because they don't have the brand recognition of a Chime or a SoFi, but they're processing real transaction volume and signing real business clients every quarter. The embedded finance market is expected to grow at a compound annual rate exceeding 25% through the end of this decade, which means even modest market share gains translate to explosive revenue growth for a company operating off a small base. A stock that goes from $2 to $6 is a 300% return, and in fintech infrastructure. That kind of move is not fantasy, it's a function of timing and patience. Here's what ties all 6 of these opportunities together, and it's the most important thing I'll say in this entire video. Cheap does not mean bad, and expensive does not mean safe. The price per share is literally just a number, and what matters is the value underneath it. All 6 of these names share a common thread. They're in growing industries, they have real operations, and their price action is beginning to reflect that smart money is paying attention. The window between when informed investors discover a stock and when the mainstream financial media covers it is exactly where life-changing returns are made. Now, I have to be responsible here and tell you clearly, none of this is financial advice, and every single one of these picks carries real risk, including the possibility of losing your entire investment. Under $5 stocks are inherently more volatile, less liquid, and more susceptible to manipulation than large-cap names, which is why position sizing and diversification are non-negotiable. Do your own due diligence, read the filings, understand the business model, and never invest money you can't afford to lose. That's not a disclaimer. That's the actual strategy. The investors who win in this space are not the ones who gamble blindly on cheap tickers, but the ones who do the work, manage their risk, and stay patient. If this video opened your eyes to a part of the market you've been ignoring, hit that like button right now, because it genuinely helps this channel reach more people who deserve access to this kind of analysis. Subscribe if you want to be in the room when the next set of hidden gems gets uncovered before the crowd arrives. Drop a comment below and tell me which of these 6 stocks you're going to research first. I read every single one. The money is out there. The information is available. And the only thing standing between you and your next opportunity is whether you're willing to do what most investors won't: look where nobody else is looking.